So we'll go to the monthly time frame, guys, right here. So what you can see is already what I can see here is we had an impulse. Okay, there's been an impulse move in the market. That's on a monthly time frame, and then we started to correct. Okay, guys, you can see we having this correction right here. So right about these areas, guys, there's few things we might look for. Obviously, we would look at how the market closed previously, the previous week, and then we also need to look at how the market is gonna open today with the Asian session. Okay, yeah, and we don't really see much movements on the Asian session. Obviously, for subsequent reasons we don't know, but we'd be expecting to see bigger moves later in the day when the London session opens. Okay, so guys, we'll start with obviously our ley lines. You know how we do it, structures. So it's your boy Kitopia FX at Kitopia FX Capital Link. Okay, please like and subscribe the channel so we can grow the channel, guys. Okay, yeah, so we'll put our ley lines here now, guys, on the monthly chart just to see where we are on the monthly charts with our structure. Obviously, you can see that our structure now is giving us a correction, and this is a long-term bullish correction, guys. The structure pattern that is forming is a long-term bullish correction. So obviously, we will be looking for more buy opportunities, more opportunities to go along in this one. So we'll put our ley lines on the highest point, as you can see, and then we'll put our other ley line on the lowest point. Then we'll try to move down to the lower time frame to see the exact structures that we have. So this is what I'm seeing right now, guys. You can see I'm trying to mark up my structure, marking up my structure to just see exactly where we are and what is forming in this structure. Remember, this is USDCAD monthly chart, so we're going to move on to the weekly chart to look at a bit of price action and what has been happening. Okay, guys. So on the weekly chart now, the pattern is even much clearer. You can see how the pattern has been forming, and you know exactly what to expect for, especially if you're a pattern trader. Okay, if you're a pattern trader, you would know exactly what you're looking for. So look at our highest point, guys. We had our highest point there. Okay, and from our highest point we had a drop. So this is what I want you guys to pay attention to. We had an impulse drop, right, when we were moving from the bullish impulse correction, but now we had a deep correction which gave us the impulse drop to the downside, and then the market started to correct. You can see here the market is correcting. It's correcting, moving correctively, so which means the market was showing us that it's gonna even drop more, another level. So the market dropped to that level, and at this point what we are looking for, guys, is for this structure to form. Remember, we are looking for 3 touches in the structure. Within the structures there are other patterns and patterns within patterns. Okay. So we need to be able to identify these certain structures and certain patterns. So at this point we are looking at an ascending, we are looking at a descending pattern, and then we'll work our way through to the smaller time frame to find more structure patterns, and then we can be able to identify our entries. But remember, our long-term entry is we are biased bullish on this move on a long-term period. Okay, but that doesn't necessarily mean that you cannot take advantage of the selling opportunities and the buying opportunities within the structures. Okay, guys. So remember, there are always patterns within patterns and structures within structures. Okay, so I can see here now from this bit of price action that we had an impulse drop, and then we had a correction, and then we had an impulse and then a correction. So we made the first touch, and then we came and made the second touch. So what we're looking for at this point of time, guys, is we're looking at this bit of price action here. This is the most recent and important price action that we're looking at, right, guys? So this is where we're going to take our positions, and this is where we will see where the market takes us from now. Okay. So at this point, I can see we've got an ascending channel. This is an ascending channel. As you can see, we've got 1, 2, 3, 4, 5 touches. That's more confirmation. And once when you move down to the smaller time frame, guys, you will see that we are already forming patterns that are confirming a sell in this structure pattern here that we have. So we've got a descending channel pattern, and then inside that descending channel pattern, there are other structure patterns that we're looking for also to capitalize on. Okay, so we're going to move on to the daily time frame so we can be able to find entries and more clue to what is happening with the structure, guys. Okay. Our bias is bullish, but that doesn't necessarily mean that we won't take short positions as we are waiting for the other bigger structure patterns to form on the higher time frame. Okay, so on the lower time frames, we'll find a lot of multiple entries, different type of entries. We have sell opportunities, we have buy opportunities. So looking at this bit of price right now, guys, so I want to actually remove some lines because I don't want things to be really confusing you guys. I'm going to change the colors actually to make it easier for you to see where we are with the structure. And then we are looking at the inner structure now. So forget about the outer structure right now because it might take a little bit of time for price to get to that level. So let's look at the inner structure and what we can expect to take place in the course of today and tomorrow. Okay, so right now, if I zoom in, okay, if I zoom in, already I'm spotting something here. This is very good. This is very good. I'm spotting something here, guys. This will be a very good entry. So this is USDCAD, guys. The market breakdown of my forecasting on USDCAD, and right now I can see if the market opens right now, we are most likely to take a buy position. Reason being, why do I say we're most likely to take a buy position, guys? There is an inverted head and shoulder pattern here. I can see an inverted head and shoulder pattern. Sorry, guys, this thing is messing up with me, messing up with my chart. Let's delete it. There is an inverted head and shoulder pattern, guys. If you can see it, you cannot unsee it. So I've seen an inverted head and shoulder pattern here, guys. And then within that inverted head and shoulder pattern, I can still create another structure pattern that I'm seeing as well. This is an ending structure pattern. It's an ending structure pattern showing you we're about to get a reversal right at this moment of time. Okay. So I want to quickly just mark up this head and shoulder pattern so you can be able to see it, and you can be able to see what I'm actually seeing here, guys. So we've got and then so what are we going to be looking for here, guys? We are looking for this head and shoulder pattern formation. And remember, this is the daily time frame. We are on the daily time frame, and we've already had a bullish close. If you look at how bullish this candle is, this candle that closed, it engulfed the bearish candle, right? I prefer using blue and white candles. I want to take out that mass psychology that you have on the red and green candles. You know, like everybody's got this idea and they're looking at the red and green candles, and we're trying not to be looking at those things. So that is why we've got our candlesticks in in red and in white and blue, just to get over the mass psychology of colors in the candlesticks. Okay, guys. So already we can see we closed bullish on a daily time frame. So if we go to the 4-hour time frame now, you would see how clear this pattern is, guys, on the 4-hour time frame. And look how beautiful this looks. Look how beautiful this looks on the 4-hour time frame, and then we can just adjust our lines. So this is the good part about trading patterns and structures, guys, because you can get to just have few lines on your chart, and you don't have to have lines like this, and then they mess up your charts, and your charts are just two structures and patterns. So that is why, guys, we are trading support and resistance in a very different way. We are trading support and resistance, but just in a different way. So this bit of price action right now on the 4-hour time frame, we can see what has been happening, guys. Even when you move, when you zoom in, if you zoom in now, you can see you had an impulse. You had an impulse move, right? You had an impulse move, and then you had a correction, impulse, correction, impulse. This was the end of this trend, right? This was the end of this trend, guys. Once when price came to this low here, tested this low, it made a third touch. That is third touch, right, on this ascending channel. It made a third touch, creating this reversal channel right at the bottom of the structure, giving us two touches, and moved up, confirming the head and shoulder pattern that we saw on a daily time frame. So now what we need to do here, guys, is to look for entries. Okay, we're gonna look for entries by moving down to smaller time frames, by analyzing the structure pattern and what is actually occurring. So right now, this is what we see. We can remove this line here just to be able to look at the price as it is. And this is what I can see, guys. Look at how this structure formed here. Look at how this structure formed here. Let's change the color so it can be visible. Look at how this structure formed here. So this is your descending channel pattern, sort of. And why we can say we've got more confirmation on this descending channel pattern for price to move back up. One is the head and shoulder pattern we saw on the daily chart. And when we move down to the 4-hour time frame, we can see the ending structure in this short position that we had. And we've had an impulse move to the upside. Okay, we had an impulse move, guys. This is the impulse move I'm talking about that we had. We had this impulse move, and then we've been correcting. We are correcting. So we are at the bottom of this correction, guys. Look at the touches, 1, 2, 3. Remember, we said the third touch always has the highest probability of playing out. Already we closed bullish. Okay, as you move down to the smaller time frame, you will see this bit of price action that it's much clearer, and you can actually get your entries there, guys. So we move down to the 1-hour time frame. Look at how big this structure looks on the 1-hour time frame. And imagine if you didn't get to start from the daily time frame. You didn't go to the daily time frame. So you wouldn't really know exactly what is happening with this structure. You won't even know where to enter from. So doing your top-down analysis helps you look at the overall bigger picture, and then you can move down to the smaller time frame to find your entries. But please try and not get stuck into the smaller time frame, because you end up missing what is happening on the higher time frame. Okay, guys. So right now, what we'll be waiting for to see on the Asian Open is for price to come to these levels here. So if price moves and comes to these levels, we want to see a correction like that. We want to see a correction moving to the downside, and then push back up. that will confirm our entry there, guys. So if we get to this level, remember we haven't had those touches that we can really check. We had this touch didn't really reach the bottom, then we had so we can say we had our first touch there. So we're looking for a second touch, right? And price will probably either come down again, okay? Price will either come down again to make a third touch somewhere in these areas, or it will just correct in that manner to create a bullish flag. If price comes down and corrects that bullish flag, then it will confirm our bias, okay? It will confirm our bias, and then we can be able to have an entry from this point, okay? So from this point, we can be able to have an entry, guys. So our entry would probably be at the break of that structure. So our entry will be at the break of this structure, moving to the upside, okay? Moving to the upside, our stop loss will be just below that structure there. So right here, if you're risking about 1% of your account, so your stop loss is about somewhere around 50 pips, and your take profit is about 200 pips. So obviously, guys, this would be a trade that you would have to hold on maybe for the whole day for it to reach your target. But other than that, if you are trading on a much bigger account, you obviously don't need to hold on to hold on to the trade